All right. Good day, traders. Happy Thursday to you. Welcome back to the New York live trading room session. Thank you, as always, for joining, whether you're in the live room or watching on YouTube or Trading View. Just spilt my juice over my on my desk, which is never a good way to start the day, but I suppose there could be worse problems. I don't know how many of you guys saw the trader coffee break yesterday. We were scrambling at the last minute because my computer froze, excuse me, about 3 minutes before we had to start. So we kind of hopped back on just in time to get in that thing. But it ended up going well. We had a very good conversation. We talked about drawdowns and kind of what they are, how to know if they are good, bad, how to react to them. It was a question that one of you guys left on YouTube after one of the weekly live streams. And like I promised, I go through, I read all the comments, and, we turn them into discussion points because if they're important to you, typically they're important to a lot of other traders as well. I liked it too. It was a really good discussion. At first I looked at it, I'm like, we talk about drawdowns all the time but they're a natural part of trading. But you realize when you've been coaching for 12 years that maybe some of these topics are gonna come up one or two times again. So it's always good to revisit them and remember that we have a brand new audience. I think it's also cool to revisit different topics with different perspectives. Like my perspective has changed drastically from when I was a new trader to where I am now. And it's just always fun to talk about that stuff. But welcome. If you guys are brand new to the live stream, typically, today's gonna be a little bit different, right? Typically what we do is I take you through my top trading idea for the day, and I tell you, this is what we're looking at. You shoot in ideas over on YouTube and Trading View, and I shut you down and explain to you exactly what this is. Today's gonna be a little bit different. I have absolutely zero interest in the market. I don't know if you guys have heard or not, but there's a war going on. As I mentioned last week, under those conditions, in unstable markets, I don't want to be involved. So it is in my best interest to keep my powder dry until I deem that the situation or market conditions are back to normal. So I haven't done any analysis this morning aside from looking at my oil position because I kind of knew what would be happening with oil if Russia actually invaded. And it's weird because you don't want war, but then you're kind of happy for the result selfishly. But so we're going to do kind of a viewer's choice, right? You guys, if you have ideas over on YouTube or Trading View, of course, you're in the live room as well. You can shoot them in. You can tell me what pairs you want to take a look at. It's going to be hard to be active with you guys on the live stream because you are in a bit of a delay, but we'll try our best. And we'll probably make this a short and sweet session. We'll probably make it a one session deal, so stay here an hour or so, and then call it a weekend. Also, I'm not going to be here for a trading edge this weekend. I am on the road. So this will kind of act as this week's trading edge as well. So while you guys are catching up on the live stream, because again, you are delayed, Oliver has a question in the chat. Let me squint a little bit. I'm using the new desktop version, and it's the font is so small. Someone on YouTube says, Akil, I hate you for getting me up so early. Yeah. I hate myself for getting up so early, man. Who chose these international markets? If I would have stayed in the stock market, man, I can sleep in till 8:30 every day. Oliver says, I've been trying out drawing head and shoulders patterns. Did you catch the sponsorship yesterday, Oliver? Working on a sponsorship deal with the shampoo. I've been trying out drawing head and shoulders patterns in the market. I was wondering, does the neckline need to be horizontal? And do you go from high to lows of the candle or the body? So before I answer that question, I'm going to throw this to our live room members. What do you think? So based on our training, right? So what we teach in the course, we'll handle question number one. Does the neckline of the head and shoulders pattern need to be horizontal? And again, if you guys are unfamiliar for head and shoulders pattern, it's something that looks like this, where market extends, retraces, extends, retraces, failed extension, and then ultimately rolls over. And what it is, it's a classic reversal pattern. The market is like, it's a form of an exhaustion pattern. So if you think of the psychology as like, hey, we're coming off a high trend, it's starting to lose steam, right? We fail to get a longer extension, which is a sign of, again, the market losing momentum, losing steam. We then get a deep retracement, which is not a positive sign for a strong trend. And then we fail to make an extension, right, to continue the trend. And then we eventually roll over. So Bobby says, yeah, it can be horizontal or slanted, all depending on two things. One, how the pattern is actually drawn on the chart, and two, your personal preference. So let me just find one. There's always a head and shoulders somewhere. They're a very frequent pattern. I'll show you an example. Let's see if I can find a nice clean one for you guys. If you guys know of any that are recent, let me know. Let me see if I can find a head and shoulders somewhere around here. On the S&P. Give me a second. Where's my little arrow thing go? There we go. What time frame are you looking at on the S&P? And Justin says on YouTube, Aussie Canada, 1 hour potential bet. Do me a favor, Justin. Type in the X leg for that pattern. That way our viewers can check it out on their own if I don't have time to look at it. But Aussie Canada, 1 hour potential bet. All right, 4 hour. All right, so if you're looking at this right here, it's not going to be a head and shoulders. That's going to be an inverted head and shoulders, which is a little bit different. It works the same. You're still looking for a violation of the neckline, but not exactly your traditional head and shoulders. Let's go over to the Euro Aussie. And again, this would work the same way, but just for your question purposes, or pound Aussie, excuse me. Let's go to one that has a little bit more easier to identify here. So here's one on pound Aussie. Again, not your perfect example, but you're not always going to have perfect examples. So you can see that you have your left shoulder right here. Sorry about that. Left shoulder right here, head right here, right shoulder right here. So in this case, right, this is the lowest part of your left shoulder, the lowest retracement, and this is the lowest retracement of your right shoulder, right? So if you're drawing a trend line type of, or I call it slanted support or resistance, it's going to look like that. If you're taking the lows, you're going to draw a horizontal support and resistance, right? So technically the neckline is going to be taken from this point to this point, but you as a trader, right, you can decide which way, and this depends on what you value, which way do you want to count structure? Do you want to count it as slanted, or do you want to count it as horizontal? And that's going to go back to really your basic philosophy on trading. So I would ask you this, Oliver. Do you value trend lines, or do you only value horizontal support and resistance? Or do you not know yet? And to answer your second question, I always go from wick to wick. Whenever I'm drawing out anything, it's always from wick to wick. I don't see any reason to ignore the wick. It is an important figure. It is the extreme of the session. So I think it should be taken into account. So whenever I measure anything, it's always going to be from wick to wick. So, okay, so you like horizontal support and resistance. So for you and how you would trade, your violation point would be the horizontal resistance. So if you're looking for the violation of your head and shoulders in order to validate the pattern, you're going to need the horizontal level to be violated in order for you to have a valid, head and shoulders. Let me know if that makes sense. Perfect. Yep. And again, doesn't matter. I'm not a trend line person, so I don't really value slanted support and resistance levels. It doesn't mean it's wrong. You just need to know what you value. And of course, right, sound like a broken record, you need to be consistent with it. Now, what you saw on the S&P was an inverted head and shoulders, right? So again, typically head and shoulders patterns comes at the end of a directional move, right? If we go back into the S&P, right, this is going to be basically a head and shoulders top. I'm assuming this is what you're looking at, right? This is going to be a head and shoulders top, right? Because how it's facing, the head's at the top. That comes at the bottom of a move. So it's not quite your traditional Head and Shoulders. It's going to be an inverted one. Now, again, at the end of the day, the only thing that matters is the violation of structure, right? Whether it's a Head and Shoulders, whether it's not a Head and Shoulders, kind of like what we talk about in the foundation course too, 2.0, where there's only 3 ways to trade, and how every kind of setup and all the fancy stuff that we talk about falls into one of 3 categories. It's so important to remember that, because sometimes we're going to get confused, right? We're going to get confused with Head and Shoulders and triangles and breakouts and this and that. And we're like, well, how do I trade this? How do I trade that? If we remember that there are only 3 types of trades that happen in the market, right? If we can remember that, it makes life a lot simple, because these 3 type of trades have 3 distinct principles, and then all of the other stuff just fall into one of those 3 categories. I personally found that very helpful in my trading, because it can get really confusing, especially if you're someone that's looking into like a lot of classic patterns or something like that. So good job, guys. Thank you. Helped answer a question today. Now, Justin over on YouTube says, let's take a look at the Aussie Canada, the pattern pair, as we call it. 1 hour for a potential bullish bat pattern. Going to delete my notes here. We're looking at an X leg at 92.40. 92.40. Billy chimes in with Head and Shoulders, says either neckline, but be consistent. Yep. That's where you get into trouble, where maybe today you're using the horizontal one, but then tomorrow you're using the slanted neckline, and you typically end up doing whatever you want based on the outcome that you want to get. So like if you have some FOMO, fear of missing out, then you take the slanted one because it's already completed. If you don't want to get in, I'm going to wait for the horizontal one. So again, the key is that we need to be consistent. Broken record, right? Consistency. Just like yesterday in the coffee break, where all of the questions about drawdowns came down to, again, the elemental factors of trading, like be consistent, emotional discipline, treat your trading like a business, all that fun stuff. All right, so we're looking at a potential advanced pattern formation here on the Aussie Canada. Our starting point is going to be right up here. This is going to be called our X leg, right? This swing low is going to end up being our A leg. This is going to be our B leg, perhaps. I'll measure that out and see. It looks right. And then our C leg down here. And our D leg should complete somewhere up here. We'll go ahead and measure that out. So first move is going to be X to A, swing low to swing high. Pretty decent X to A leg, guys. What would you say? Yay, nay? I got a leaky cup, which is bothering me. This is bad. I got a hole in my cup. Not a good way to start the day. Yep, should be a valid X leg for everyone. It's pretty straightforward. Swing high to swing low, sore thumb. It is an anchor leg versus an impulse leg. Again, I don't really think it matters, but for you guys that maybe know some of the different terminology. So the first thing we're going to do is we want to measure out our Fibonacci retracement from the X to the A, swing high to swing low. We know that for a bat pattern, we're looking for a 50% retracement. We indeed get that. So yeah, nice little bat pattern here. X to A, our retracement up here, A to B, our second retracement down here, B to C. And if we go up to 92.30s, that is going to give us a decompletion for our bearish bat pattern, with the zone of completion being from that D leg to the high of X. Very, very beautiful bat pattern. Well done, Justin. Very beautiful bat pattern here on Aussie Canada. What are we doing on Aussie Canada, by the way? Right below a previous level of structure. Good stuff. Duncan says, it's a nice bat formation, not keen on the support and resistance level, 3/4 of the way up. The D leg at 92.09. It's a nice bat formation, not keen on the structure level, 3/4 way up. The D leg at 92.09. It's a daily level. What are we looking at now? 92.09. So what are you saying, Duncan? Your 92.09 is right here. What is this? What's the issue with this, or what is it? The relationship? with this level? By the way, YouTubers, hit that like button again. We want to get that 1-to-1 ratio between viewers and likes. We're lacking right now. So do me a favor, hit that. Best way to support. We're going to give Duncan a little bit of time to type in and explain himself. I like these light days, no urgency, just come in and have a nice discussion. No doubt, however, there are traders out there Google searching right now. How do I trade a war? Dougie said it's been tested a bit on the daily, so I think it will struggle to reach the full decompletion on this time frame. So are we talking about a different bat on this time frame, Duncan? A daily bat pattern, or are we talking about the hourly one? Talking about a different pattern? This perhaps? The hourly, okay. The out okay. So you think the hourly will struggle to hit the decompletion because of the daily structure level? What are your thoughts on pound yen daily 4 hour? We could do pound yen next. Yes. What is the what? Well, we've already hit the daily structure level. Or are you saying that because we already hit the daily structure level, the hourly? I'm confused with the correlation right now. I guess I'm saying like I don't think I'm understanding the statement, but let me see. You're saying you don't think the decompletion will complete with this bat because of where we're at on the daily? Chris says check left a little bit more. Sure. What would you like me to look at, Chris? So we already hit the structure level here. I think that's what you're saying. You're saying you don't think because of the structure level, because we tested it already, you don't think we're going to hit on the hourly. Is that correct? I think that's what it is. But I'll wait for your confirmation because we've already hit, we've tested, we've put in a nice pin bar, and we moved off of it. That you're thinking we're probably not going to come back up and test this level on the hourly for that bat. Ryan says, "Hey Ryan, what's going on? How dare you butcher my name?" But thank you for correcting it. As long as you didn't call me the other guy, as long as you didn't, I don't mind a real, a bleal. Just don't call me a Neil. Me and him still got beef if that guy's still around. Um, he said, "Can I ask you a question regarding back test results?" Sure. Yeah, we're hanging out today, so we're not doing a top trading idea for the day. We're just chilling in a live room, having some discussion. No trading edge this week, so we're gonna make this the long form video, I guess. All right, but I'm guessing that's what Duncan is saying. So essentially, he's saying because of this level of structure right here, you can see we've already come up and tested it. We put in the pin bar that he doesn't think we're going to. The likelihood, I guess, is less that we're going to complete that bat pattern on the hourly, which would need to come to where this white line is. Duncan said, on my chart, daily structure level is as priced with zone up to 90.22. So I'm not confident the movement will test that level and the hourly complete the bat. Okay. So here's the question. With that being said, with that information, how does that affect the trade? Or does it affect the trade? Does it affect the trade? Does it not affect the trade? How is that information useful in our trading? That's the next question and perhaps the more important question. Good observation. I would agree with you. Now, again, I do believe in overlapping structure. I do think if we're here, we're likely to test here. But I get your analysis. Now the question is, how does that affect our trading, or does it affect our trading? Mickey on YouTube says no trade. Why? Why no trade? I don't want to hear the answer. I want to hear the explanation. Why no trade? And we know that if we have a rules-based trading plan, it needs to be something that's rules-based. It just can't be something like, well, I think. In my rules, I would not take target 2, only enter at target 1. Only enter and take target 1. Okay. Now I'm a little bit more confused. So okay, so why? So the first analysis said you don't think price is likely to complete the bat, but that's different than only taking target one. So why only take target one? The first analysis was I don't think price is likely to complete. And let me rephrase this. Was it you don't think it's likely to complete the bat, meaning the decompletion, or win, complete and roll over? I guess we should clear that up first. Mickey says no pattern. There is a pattern there. But if it's not a pattern for you, then you're correct. No trade. But there is a pattern on the hourly. I don't know if you came a little late. There's a bat pattern here. But if you don't see this as a bat pattern, then correct. No trade for you. But we're talking to a trader. Oops, sorry, I had that all wrong. We're trying to figure out if we're making adjustments, and if the adjustments that we're thinking about making, are they solid adjustments? So I guess let's start here, Duncan. So just to make sure I understand the previous comments first and foremost, are you saying that you don't think the bat pattern is likely to complete, meaning price reaches D, or you don't think the bat pattern is likely to complete and roll over to targets? Which one of those? And correct, potential. It's always a potential pattern until the completion. But I like this discussion. This is an interesting discussion. We'll start there. Are you saying that with the previous thing? I'm not confident the bat will complete. So what do you mean by complete? Like complete meaning hitting the decompletion, or complete meaning like hitting the decompletion and being a profitable trade? Just so I know what we're looking at. He says I'm not confident the bat will complete hitting the decompletion first. Okay, so I'm not confident the bat pattern will complete. However, it does complete. It's valid in my entry rules, but my targets is now in a heavy congestion zone, so I don't feel it will roll over to target 2 at least. Well, let me ask you this. With an advanced pattern formation and how they form, aren't we always in a congestion zone? With the fact that they form in consolidation? I mean, we look at the nature of an advanced pattern formation, and what do we have every single time? We've got consolidation. So my question is there an actual is it fear-based, or is there I'm trying to figure out what makes you in this scenario. I have no problem if you're saying I always take target ones, always take target twos, or I'm not taking extended targets like a full reversal. But in this scenario, why is there the decision not to take target twos? And I'm not buying the congestion zone thing, because every pattern forms in a congestion zone. So what's the reason in this case not to take target twos? Now, again, I think it's a different story. Sometimes we talk about using patterns as like trend continuation opportunities, where like, hey, we can take a target two and look for an extension. That makes perfect sense, because you only want to do that when a pattern formation is within like in a continuation scenario. So like if you have a bearish pattern that is in a bearish trend, I'll give you guys an example. So if you have price like this, right, in a bullish trend, and then you've got like a small bullish pattern like that, then sometimes you can get fancy and say, hey, I'm going to take the pattern right here. I'm going to hold on to a secondary target for longer targets, because it's in the overall continuation model. But most patterns come in consolidation or in counter trend scenarios. But I get that saying like, hey, this one's a true counter trend pattern, so I'm not going to take extended targets. But I'm not yet. You haven't sold me yet on the reason for taking target ones and target twos, or target ones and not target twos in this scenario versus other scenarios. Or says always have multiple levels of structure present. Q said, how do you gauge when to stay out of the markets completely due to events going around the world? Is it discretionary? Do you have main events like wars, Brexit? Yes. Interest rate decisions, wars, and Brexits. It's a good question, Bobby, and we'll get to that while Duncan is writing, and we'll get to Ryan's question on YouTube. Busy slate today, but yeah, you just judge the market, and like, so if you woke up this morning and you looked at the market, did you see anything that was out of the norm? Elections as well. Yeah, elections, major elections, another one, a good one, Orsi. When you looked at the market this morning, did you see movement that was not the norm? Right? My guess is you did, right? You saw European stocks and currencies drop. You saw oil, right? So you know that if there's movement, we saw the same thing with Brexit. If any of you guys traded during the Brexit, not even the initial Brexit, but kind of like the follow up Brexit stuff as well, right? The markets are emotional, they're sporadic, they're jumping all over the place with every news headline. So when you spend enough time in the market, you start to understand the normal movements of the market, right? You start to understand what are like outlier moves and what are normal moves. So when you see these outlier moves, and if you don't know what it is, if you do your research and you're like, oh, there's a war going on, this is what caused those moves. You know that while that is happening, right, there's a likelihood that you're going to see more moves like that, right? Now, in Brexit was kind of tough. Like I remember I stayed out of the pound pairs for like a couple of months because it drug on for so long. Um, with the news of this war, I think it's going to be pretty. It's with the amount of coverage on it, it's going to be pretty obvious when things are kind of back to normal. And elections are easier because elections are typically a day or two, or if you get a weird one over a weekend like that. So it's discretionary. I mean, obviously you have your high impact events. Another one, Bobby, will be like these ones don't typically last as long, but like natural disasters. So I've traded through like tsunamis and stuff like that, where they don't last too long because again, it's the event happens, then there's usually like a retracement off of it or a correction from it. But yeah, you got to use discretion. I can tell you what, it's more common sense than anything, right? When you spend enough time in the market, you have an idea for how the markets move. When you see something that is not normal and there's no like news event related to it, there's not like a CPI or a GDP that comes out, then it's better safe to be sorry. It's better safe to be sorry. So I was like this, if you guys remember, 2 weeks ago, and then the news had kind of said, hey, they're pulling some troops back, and things got back to normal in the market, and then boom, today. But yeah, got to use discretion. All right. Going back, Duncan said the congestion of the smaller time frame, 4-hour hourly is fine for me. However, the daily or weekly support level is respected. The number of times this level has been makes me believe the roller will not be. Okay, so let me ask you this, Duncan, going back, because I want to dig into this. So based off the level of structure that we're identifying on the daily here, right? Are you projecting a hold and a move lower, or are you projecting a violation higher of it? What's the influence that this daily level of structure has on your overall analysis of the market? Now we'll get to your question, Ryan. But let me know that. And then real quick, Duncan says, my point is that if this pattern was fully either side of the daily structure, I'd treat it as a normal pattern. The fact a higher time frame support, I'm projecting a hold. Okay. So wouldn't that work in the favor of your pattern? It's a bearish pattern. If you're projecting a bearish hold, doesn't that analysis line up in favor of your pattern? So my point is that this pattern is fully either side of the daily support level, structure level. I treat it as a normal pattern. The fact that a higher time frame support runs through the middle of the pattern removes my confidence in target 2. That doesn't make any sense, Duncan. It doesn't make any sense. If you think this structure level is going to hold, right, that means you're expecting a bearish movement off of it. Why would that give you less confidence in target 2? If anything, target 2 would be better. So it doesn't make any sense. Another thing that I would say too is that daily levels of structure are so big. So it's hard to say if a daily level of structure runs through the pattern. I mean, this thing is, the pattern would be well completed before it's out of the daily structure zone. So you're not, I don't know. It doesn't, for me, it sounds like more of a fear thing. Like it doesn't, it would be one thing if you said, hey, I think this level of structure is going to be broken. Like if we had an example, if we had a pattern that completed right above a level of structure and you're like, because we have a break and close above, I'm projecting a move higher on the daily. This is a bearish pattern that goes against my projection of a move higher. Because of that, I'm going to be cautious and only take target 1 or not take the pattern. that would make more sense because now you have conflicting analysis. You have your higher time frame shouting bullish, but your pattern saying bearish. So I get that. But it sounds like what you're saying here is that you're projecting bearish on the daily. You've got a bearish pattern on the hourly. If anything, you should be looking for a bigger move if the overall projections that were likely to continue lower. And you got to realize how small the hourly pattern is compared to the daily. So we look at this, if this thing completes and rolls over, I'm going to mark on my chart where target 2 would be, right? If this thing completes right on a dime, which could, but we're looking at a target 2 about right here at about 91.88, right? Look at where that's at on the daily. I mean, everything is in this same zone. That white line is the target 2. It's right there. So I need more convincing. I'm not sold. Not that I have to be sold because it's not my trading plan, of course. But I think I don't know. It's that it doesn't make sense to me. Real quick, based on my measurements, if the pattern completes, it's above the. No, it's not. It's not above the support and resistance level. It's not. The support and resistance level is right here, right? Is this not the high of your support and resistance level? The wick of this candle, or let me know where your zone is drawn out. We could draw things out differently, but this is the high of your support resistance level right here, right? This is the extreme. This wick, the pattern doesn't complete above that. Based on my measurements, the pattern completes above support and resistance. Sorry, I read that. I think I read that already. Based on my measurements, if the pattern completes, it's above the support and resistance level. And T1 is back at the support resistance level. To get the target 2, it needs to push back through support and resistance, which I don't think it will do. You're still looking at the hourly support. I'm talking about the daily level. Okay, so give me the level for your daily. Yeah, give me the level. I think we're just looking at two different support resistance levels. Bobby says, when you first said about the level of structure at 92.10s, I thought you were referring to the structure swap and the level. Yeah, I thought we were looking at this level right here, this structure swap, the previous level of support that turned into resistance. But he said 92. He said 92.09s is when it started. That's why I thought we're looking at this zone, right? Unless are you only looking at the closes? My guess. You said 92.09s. So are you only looking at these closes right here? Is my guess, and not the extremes of the zone. That would make sense. I think that's maybe where we're getting different views. I think he's only looking at this exact close level right here, and not the entire zone. The daily support resistance measure is 92.08. All right. So let me ask you this: is it with your support and resistance? Do you look at a zone, or is it just one specific price point? I think we've gotten to the bottom of this and why we're getting difference of opinion. I think you're just looking at one price point, right? That would make sense that the pattern completes above that price zone. Okay, but you're looking, just to be clear, you're looking at one price point when you draw support and resistance, right? You're not measuring out a zone. You're not saying this is the zone. You're looking at one specific price. If that's the case, I'll explain to the traders what you meant by the previous statement. But let me know that first. Just yes or no. Correct. Okay. So what Duncan's doing is this, right? So in many cases, we look at zones where we're saying, we'll look at the highest close to the highest high, something like that. What Duncan's doing is he's looking at one specific price. So you see this level right here, the close of this candle. This is the one specific price that he's looking at. So what he's saying is that the pattern, the decompletion of this pattern completes above that zone or that price point. And because it completes above that price point, that's why he's not interested, or he's not confident in the pattern completing, because it has to break above that price point. But if it does complete, because it completes above that price point, he's not confident in it making its way down past that price point. Did I nail it? I apologize if I'm you guys on YouTube and Trading View. I apologize if I'm scaring you away with this talk. This is the stuff we get into at the usually after I kick you guys out, where we really start digging into some analysis and stuff like that. So I apologize. It's sorry, I don't know what to say, but I think it's a good experience to hear this thing. I think this is a really good discussion for you guys to hear as well. I don't want you to be overwhelmed, um, but that's what you're saying. So in that theory, it makes sense with what you're saying. I understand what you're saying. Um, I just don't think it's right to look at a one price point for structure. I think that is, I don't think that makes any sense unless you're going to look at maybe the highs of something as that violation. But I don't. So the question I would have is why is this point important, but not the extreme of the zone? Because let me ask you this: so would this count as a higher high, higher close with this candle, right here? When you see this, do you think trend continuation? Higher high, higher close, continuation higher. Then we got to get to Ryan's question. Then we got to get to pound yen. I should write this down so I don't forget. We'll finish up on this soon. But do you see this as a higher high, higher close and a continuation higher? For the higher time frame structure, yes. I think you're wrong. I think you're wrong on that. It's not. It's well, obviously you wouldn't label as a higher high, higher close, but I don't. Yeah, I don't think you could ignore the extreme of this zone. Now, again, this is different. I don't like. I take it back. I don't think you're. I don't want to say I think you're wrong. I'll just say I don't agree because I never want to call anyone wrong in how they're trading unless they're blatantly wrong. But I don't personally agree with this way of identifying structure. I don't see how you can ignore the rest of the information that the candle has given us. Like, how can we ignore the wick? And that this would mean that we're taking trend continuation opportunities without violating structure, right? Because if this is a violation of structure, this means you should be looking to get long here. I think it's a very bad idea to get long while we're still within the reversal range of a previous level of structure. And you look at this scenario right here. If you would have got long here, you would have been toasted. But where did this candle test? Well, this candle tested the same extreme zone here. So I think I don't agree with that way of identifying support and resistance. But as I mentioned before, it's not my trading plan. I don't have to agree with it. But I do appreciate you sharing your opinion. I hope you guys appreciate me sharing my opinion. Like Bobby said, always good debate. Or Dungy said, always good debate. I think I think you're going to run into a lot of trouble there doing that, though. I would just say that. So, and we can follow up the conversation if you want. I don't want to bore people to death. But appreciate you explaining. I get exactly what you meant now. It took a while because, it's hard during text. But I get exactly what you're saying now with the single level and the pattern completing above that level and not looking for targets back beyond that level. That makes 100% sense now. All right. And let's go to pound yen first. We'll do some analysis. Then I'll get to Ryan's question because that came in afterwards. So someone said, look at pound yen daily and hourly. All right. Pound yen, we're going to start on the daily. Identify, predict, decide, execute. What do you guys identify here? Prices at previous structure. Again, we can look at this zone right here as being our previous level of structure support. We know this is a decision point, right? If price can violate this zone, then we would predict a continued move lower. I don't think there's a lot of room lower at all. And again, we're talking, if you guys just came in, right? I'm in no trade conditions right now. I don't think the markets are in a Not that the markets are ever rational, but I don't. The markets are in kind of a frenzy right now because of all the fundamental events that are going on. So take that with a grain of salt. We're still going to do analysis based on what we see as the technicals, but I think you have to be very cautious with executing any trades just because of what we're going into. But normally this would be a decision point where we go to that if-then syntax. If price violates this level, and by violate we mean lower low, lower close, then we would project a move lower. If price can hold this level, then we would look for counter trend trading scenarios on the way back up. So what we want to do here on the higher time frame is we want to set up our trade. We want to, it's very hard to look for bullish and bearish reasons at the same time. So we want to focus all of our energy on one side of the market. So when I look at this right now, do we have a violation to the downside? No. So do I have any reason to look for bearish trades? No. So we can focus all of our attention on the bull side, all right? If we're allowed to, obviously, if it's within your trading style. So let's go down to the 4 hour, right? And we see our high momentum candles happening on the 4 hour. Again, we know why this is happening, right? Flood to the end, right? Safe havens. And we can see that we've entered the structure zone. So now we can start building our CTS score, our case for entry, right? So we got RSI overbought, that's 1. We know we're at a level of structure, that's 2, right? Price action has entered that zone. The next question is, okay, if I'm a structure-based trader or a CTS trader, what else do I need? And believe it or not, right, some of you guys, this is the most confusing part of trading for you. This should be the easiest part, right? Why should the entry be the easiest part of trading? Not always easy to do, not always easy to pull the button and say buy. That can be pretty difficult. But why is the entry the easiest part of your analysis, I guess, in comparison to the other parts? It's funny because you get struggling traders who get to this scenario and they're like, this is the hardest part, Akil. I have no idea what to do. I get so confused when it comes time to enter. And then you get professional traders that are saying this is the easiest part. Why? Because the entry signal is rules-based, right? It's rules-based. It's in your trading plan. There's only one or a handful of things you can do. And how do you know what to do? Refer to your trading plan, right? Open up trading plan. If price action comes down to previous level of structure, then look for RSI to be oversold, okay? All right, or RSI oversold, all right. If RSI is oversold, then look for double bottom, all right. We got the bottom, yeah. I'll draw it on so we can make it more realistic. All right, we came down. All right, we got double bottom. We go to my rules section. How do we define a double bottom? We look at some pictures in my trading plan. Okay, just solid double bottom. We tested the lowest close, didn't close below the lowest low. Okay, next step, step 3. If price action gives double bottom, then look for RSI divergence. All right, we got RSI divergence. Where's my, okay, that's slanting upwards, a check. If have RSI divergence, then enter next bar market. Okay, hit the button. Well, this is where it's like, oh, right? And someone's got to slap you in the back of the head. Just buy it, dummy. All the rules are met. Buy it, dummy. But you see, it's a process, right? You see how easy that was? If then. Check them boxes, right? Step 1, boop. Step 2, boop. Step 3, boop. Step 4, boom. Right? It's like Jason Greystone said in the last presentation, the last workshop we did with pilots, right? Before the pilot launches or takes off in the plane, they have this checklist they have to go through. They check this, they check that, they check this. If everything checks, then boom, we're good to go, right? This should be the easiest part because it's in your trading plan. What you're allowed to do is in your trading plan, right? If something on the chart doesn't match what's in your trading plan, you can't do it. Well, Akil, what about this pin bar? Are you allowed to take pin bars? No, it doesn't matter. Well, Akil, what about this inside bar? Does it say in your trading plan you can trade inside bar breaks? No, then who cares about it? But Akil, the moving average, what does it say about moving average in your trading plan? Well, I don't have anything about moving average in my trading plan. Okay, then what does it matter? Get it off your chart, right? Your rules are there for a reason. You just have to follow them. Now, again, easier said than done, right? If following rules was that easy, we wouldn't have as many people in jail, right? We wouldn't get in trouble as kids. So I'm not saying it's easy. But the process should be simple. The process should be simple. So that's the step you're looking for your entry. we know we need to know three things before we ever take a trade: entry, stops, and targets. Right? Entries are typically the easiest. Stops are pretty easy as well. We may not be able to do a defined stop loss right now because we don't know when that reversal is coming, but we know that stops need to be, or they don't need to be, they should be. Where should stops be, guys? Do you take candlestick patterns into account? I personally do, yes. Yep. Do you need to? You don't have to. You can take anything into account you want. All that matters is what is in your trading plan. If you're a higher high, higher close enterer, yeah, whatever, that word, then yeah. If you're not, then it doesn't matter. But stops should be below structure level. Again, I like using an ATR multiplier. I wouldn't know the information yet because we haven't quite shown us that we got to move, but it has to be below this level of structure. Now, here's the part that gets a little bit tricky depending on how you take targets. And shameless plug here, I did a YouTube video last week on different methods of taking targets. If you didn't see it, check it out. I do these videos for a reason. If you have a static way of taking targets, and it's pretty easy, 1 times risk, 2 times risk, ATR, whatever it may be. If you have more of a dynamic way of taking targets, think like the other trader, you want to ask yourself this question: if price goes up, then where do I think price is likely to go up to? And what would you guys say? Oh, they are being treated today, Bobby. It's getting real for YouTube. I hope I don't. What I hope though, Bobby, seriously, I hope I don't scare people away. Because we have these real conversations here all the time. Because I know you guys are serious about trading, and YouTube's serious about trading too. But like a lot of newbies get overwhelmed, and I know you guys are like that too. I was like that, where you get so much information at once, and it's not laid out in a kind of an easy, digestible way that you're just like, I can't do it. There's no way I can't do it. Bobby was talking about this. I didn't even notice that. So I don't want people to get discouraged. What I want people to do is kind of enjoy the discussion and take the key points out of it. But I do want you to see kind of from a macro view what professional trading looks like. I want you to see bigger picture. I want you to see, okay, 2 years from now, this is what I want it to look like. This is where I want to be. And then you start working your way backwards in that digestible way, right? You have that big goal. And then you start breaking down those tactics. Okay, what do I need to do to achieve that goal? So I hope that's how they take it. And if not, maybe they're not built for trading. Not everyone is. It's not a bad thing. Ryan says 115.16. Draw some lines on here. 155. Looking at multiple charts. 155.16. So right around here, looking at this little structure goblin right there. Anyone else? Raphael says 155.50s. He's raising you by 35 pips. Ryan, take that. Bobby says, yeah, for sure. You can't expect to get there in one day. No. Despite what the internet will tell you. Ooh, Orsi. Oh, she takes that 155.50 and brings it down to 159.49. Now, let me ask you, Orsi, why 159.55.49 versus 155.50? YouTubers, there's a message coming. Listen up. Because the price is right. She wants to screw him by 1 pip. Yep, that and the psychological level. Right? Why be at 140? Why be at 155.50 when you can be at 149.48? So we're all looking at the same level. We don't need to do this dance too much longer. YouTube real quick says 155.07s. I'll draw those in. I'm sorry, I refer to everyone on YouTube as YouTube. I got the font so small that I can't really see the names. 155.07. I got 154.60s on here. That's going to be a lower one. 156 even. Got a higher one, so we got people all over the place here. Anybody bringing any fibs or anything like that? We didn't do this either. I didn't think we have, but I should probably draw this one. I don't think we had maybe we do have a 1618 down there. Yeah, we do have 1618. Look at that. We have a bat for some people there, yeah. Depending on if you have this as an impulse leg, or X to A, I should say. X to A to B, B to B could be a bat for some people down here. That'd be an aggressive way of getting in this trade. Let's bring a Fibonacci retracement out from a few different levels here, and going back to targets from our ultimate swing high to swing low. 382 Fibonacci retracement, right in that 155.16 zone, 50%, right at the kind of the last consolidation before the break. And we'll bring one more fib in. This is going to be, we're going to have to adjust this one as price continues. But from our last swing right here, you got a 50% right in that level too. So yeah, I think this is a good structure level to look for. So again, once you know your entry stops and targets, you can measure out your risk reward, right? A cool little trick is this. If you're someone that requires a 1-to-1, take your target, take your stop, and you know that an entry anywhere above this level right here is going to give you an inverse risk reward, less than 1-to-1. You know, an entry anywhere below this level is going to give you a good risk reward. Again, it's still a little bit too early to make those decisions. We got to see how price reaction is zone. But that's a good example of how you would go around really making sure all aspects of the trade line up. So good stuff there. I like the extra analysis with the bat pattern as well. Sweet stuff. I think this is a good idea, or a good level. All right. I understand preparing for a bullish move, but why wouldn't you prepare for a bearish continuation also? I mean, prepare for both. That's a good question. And here's the thing. So we do prepare for a bearish move. And the cool thing about having a trading plan is like you don't really need to do too much preparation, right? You already know what you're going to do, right? That is one of the most wonderful things about a trading plan is because you have confidence in it and because you know what you can and can't trade, right? You already know how you're going to handle a situation before it happens. So the thing is this, and the question was why. I understand preparing for a bullish move. Why wouldn't you prepare for a bearish continuation as well? And I'd love to throw that to our live room members or anyone watching live. Why wouldn't we prepare for a bearish move right now? What would be your reason? Or would you? And I think it's a very good question. And then I'm going to get back to Ryan's question on back testing. That's a very good question. I'm seeing YouTube a little bit. Wait, you have 382 Fibonacci retracement. Good job. Yep, good analysis on there as well. Yep, good work. So my response, I see Bobby typing, so we'll give him a few seconds. Bobby says, I would be aware of the bearish move, but the bull move is likely to happen first. Yep. So and Mickle just put this on YouTube. Hasn't broken structure. So is it necessary? It's kind of like, no, why'd you delete it, Mickle? You were dead on. Don't delete your comment. It's kind of like, I've done a lot of work on productivity and efficiency in my life over the last 5 years because, I got really good at trading because I just grind it for like 12 hours a day. And then once I had kids, I couldn't grind for 12 hours a day. So I had to figure out ways to get the same amount of work done in less amount of time. And it was very difficult, something I still struggle with. But there's a tactic for when making a to-do list that says, put your most urgent task first, right? So what is stuff that needs to get done? What is stuff that has a deadline that's due tomorrow, right? Would you rather work on something that has a deadline that's due tomorrow or work on something that has a deadline that's due in 2 months, right? It's probably more important to focus our energy on working on the thing that has the closer deadline, correct? So when we look at our trade right now, we know that in order to look for a bullish opportunity, we need to pay attention to how price action reacts in this zone. In order to look for a bearish opportunity, we first need price action to violate this zone. So what situation is more urgent, would you say? The bullish opportunity, because it's technically in a zone where we may have to make a decision. The bearish opportunity, we have time, right? We need a violation first. And price is about 100 pips away from being violated. So we just don't need to spend energy on it right now. So because we have a trading plan in the back of our mind, we know how to handle it. I know that, okay, well, if we violate, then I'll look for pullback, all that fun stuff. But we don't need to spend the time mapping out the entire trade right now because right now it's just not urgent enough. You guys follow me? So it's all about priorities, right? It's all about priorities. And that's what saves our energy. Because if you're in a situation where you're spending a lot of time doing your bullish analysis and you're spending a lot of time doing your bearish analysis, you're splitting your energy in half. And when you split your energy in half, you're likely to kind of overlook something that's very important or burn yourself out, that too. So we're focusing on energy on what needs to be focused on right now, which would be the bullish opportunity. If we violate that level, then guess what? There is no more bullish opportunity. We don't need to spend any more energy on that because it's wrong. And now we can focus all of our energy on the bearish opportunity. So it's all about conserving our energy and using it in the most efficient way. So I don't really like the bearish opportunity, but there is a bearish opportunity there, but it just doesn't need our attention right now. Yep, same thing with pattern formation is like if you're putting orders for a pattern on when you only got X to A set up. It's like, wait a minute, we need like 3 more legs to happen. Okay, good stuff on pound yen. I got a question from Ryan on back testing a little bit. I'm not sure if I missed one here in the chat. Cannot be afraid to ask questions and be told you're wrong. You can't learn if it's your only view of the situation. Yep. Real quick, Alejandro, before you get to Ryan's question, Alejandro says, how do you handle a situation where you're looking for a counter trend trade at previous level structure, but there are multiple overlapping levels of structure? You got three situations, Alejandro. And the question is, how do you handle a level of structure when you have overlapping levels of structure? We can go back to, what was the first pair we looked at? Aussie Canada for that. Real quick, I want to, oh no. UDCAD. Actually, I am curious real quick. I'm all over the place. I'm always all over the place. Just curious on what our volume profile looks like in this level. It's got to be at the top. Oh, no. Bottom. Yep. Here we go. Spike right in here. Yep. Perfect. All right, let's go to Aussie Canada real quick. This is a good example. So how do you handle counter trend trading situations when you have multiple overlapping levels of structure? So this would be an example right here, Alejandro, of let's say you were someone looking for a counter trend scenario here in this zone, but you got a level of structure here, you got a level of structure here. There's really 2 things you can do. 3 things. 2.5 things. One is you don't take the trade, right? You don't take the trade at the lower level of structure. Your rules say that you need to wait for the higher level of structure. That's one. So you don't take the trade, you wait for the higher level or the next level of structure to be hit. 2, you take the trade as usual and you just accept the fact that your stops aren't going to be in a good place. And that sounds bad, but it's not as bad as it sounds. But you come to peace where it's like, hey, I may get skunked out by like a wick or something like that. That's number 2. 3 is you take a more conservative approach. So let's say you're someone that usually waits for like a 3-bar reversal, like a more aggressive entry. Instead of waiting for a 3-bar reversal, maybe you wait for a double top or a 26.18. Something more conservative that really shows you that price is likely to reverse at this level and not spike higher on its way to going down. So those are the 3 ways. Let me know if that makes sense. 1, you don't take the trade. You just wait for the higher level, the more powerful level of structure. 2, you take it and accept that it's going to be a bad stop loss, which again, it sounds horrible, but it's not as bad as it seems. You just you eat it sometimes. 3, you use a more conservative approach to entering the trade. So and again, all this has to be in your rules, your ability to do so. But maybe if you're like a really aggressive trader where it's like, hey, I just use a pin bar. Maybe you go to something more conservative to look for more reasons. I guess 4th would be you can enter the position with half size. You can take a money management approach as well, a position sizing approach. Excuse me, where it's like a CTS trade, where if it's a low score, you can take it with a lower position size. Maybe you just half size it because it's more risky. Never thought of that. But yeah, that's how I would handle it. All right. Ryan says, we're probably going to wrap up soon, guys. Again, quick session today. But if you have pairs you want to take a look at, type them in for me. Good Q&A here. Ryan says, going through the 10th and 20th round of back testing. Oh, jeez. Jesus. Getting blurry now. Have 6 pairs total going through them on a year-to-year basis. They range between 2 and 6% per pair per year. How would you go about trying the max drawdown, about tying the max drawdown between all the pairs together each year? Apologies if it's a clear question. Ooh, that's a good one. Would you guys like to answer that live, rumors? Or she says, and you're still alive after all that back testing? He's got blurry eyes. Blurry eyes and carpal tunnel in the hands and the fingers, and the mouse button is broken. So basically the question is, so he's done all this back testing on these pairs, and he wants to know how to find out the max drawdown. He's done back testing on all these pairs individually. He wants to know how to find out the max drawdown on all of these pairs combined, like as if he were to create a portfolio. Yep. So combine them together. So take your individual back testing results, right? You're this pair, and you're that pair, and you're this pair, and you're that pair, and you're this pair, and you're that pair, right? And combine them all together to see what that trading portfolio looks like. And that will give you everything from maximum drawdown to true return on investment. Most importantly, it will give you a true look at your equity curve. And you'll see what pairs help or hurt your portfolio in different ways. So combine them. As our powers combine, I am Captain Planet or Voltron. Individual pieces together or more powerful. Thank you, live rumors. Wiz says, wouldn't MACD make it more clear to see bullish in this case? Nope, not at all. I don't remember what pair that was referring to, but my answer would be the same. It would not. Nothing against the MACD, but remember, with I'm a price action and structure based trader, right? It's important to understand that indicators are. Does price follow what indicators do, or do indicators follow what price does? Right? Indicators are all going to be lagging behind price. So if you can understand price, that's going to give you the most important prediction. Now, can you use a MACD as confluence into a trade? Yes, of course. Yeah. Yep. Certainly can. So just like how we took the kind of the little diagram on your computer in front of you right now, you see. So if you look at that middle circle as being price, right? That's going to be the most important thing you look at, unless you're trading like a fully mechanical system. Even then, what you're trading should be based off price movement. But if you look at that middle circle being price, everything else is complement. So it could be MACD, it could be RSI, it could be pivot points, volume, it could be stochastics, whatever else you want, Fibonacci, right? All those are like the supporting cast. So yeah, it can still be very important in you making a decision. You may need the MACD could be a filter where you can't take a trade unless the MACD is showing you a certain cross, or it's above the midline or something like that. That can certainly be a filter that tells you if you can or cannot take the trade. But with the question, wouldn't the MACD make it more clear to see a bullish case? The answer is going to be no. But that answer would be no for any indicator. So you can tell me, Akil, if the RSI is oversold, doesn't that mean we're going to reverse? Not at all. In fact, it means it could. You can look at it as the exact opposite. If we just went oversold, it just means there's a massive amount of strength in the market. We're probably going to continue bullish or bearish for a little bit. So nothing on its own really works, guys. But it's all about what you combine together and how you use it to complement your trading style. I truly believe having a beard should be in your trading plan. Should be. All right. Anything else? We got a quick day here, guys. Again, we're in war-torn market, so I don't have any. If you're just joining, I don't have any interest in trading anything. But I love good trading discussions. I can have them all day. Well, not all day. I have to eat at some point. But I hope you guys watching the live stream got a good kind of glance at what we do every day. I know we share a few the top trading idea of the day, and I usually throw in a little bit of a rant, but we try to keep it as technical as possible. Once you guys are gone, we dig into some issues, right? This is a live trading room. It's not a signal service, so we're not just here looking for trading opportunities. We're doing analysis, and we're digging into the different topics and questions that traders have as they work through their journey of becoming a consistently profitable trader. I think it's one of the most powerful things we have here on the platform, because it is one thing to watch a trading video. It is one thing to go through it. But if you don't know, you'll soon realize that the live markets are completely different than whatever we've picked out in training courses. Now, we try our best not to show kind of like perfect examples. We try to show some sloppy ones as well, but there is no better training tool than being in a live environment. Like jump in the water and learn how to swim. And we get to do that every day here, where we continue to train. And you can see the people that have been here for a while, they become very finely tuned because of the repetition and the consistency, which is pretty cool. Finally tuned to the point where, they answer the question before I even ask it, which is kind of annoying. They know what I'm going to say, but kind of cool to see that moment. Yeah, no problem. I guess the long-winded answer would be to record individual trades, adjusting balance each time in correct date order. Surely there's a more efficient way. Record individual trades, adjusting balance. Well, adjusting balance each time. Talking about account balance? No, just track all your trades first in a single spreadsheet. So combine them all. Right, just copy and paste them, then you can sort them by date, and it'll have all your trades in the exact time order that you took them. So it doesn't take that long. If you literally copy and paste on an Excel spreadsheet, assuming you have the dates for all your trades, copy and paste them, and then just sort it so it goes in chronological order. And then it'll throw all your trades into one big old spreadsheet, and then implement whatever position sizing strategy you're using, and you'll see your return on investment. It's pretty simple. Pretty simple. Just a lot of copy and pasting and some right clicking and sorting, or a little whatever the thing is at the top, the little, I don't even know what it's called, triangle looking formula thing. But yeah, it shouldn't. It's not. You don't have to individually type in each trade over and over again. Assuming you've got detailed backtesting, which I think you do. But yeah, just a little copy and paste action, right? Ooh, I'm a barbarian. Or she said my beard is getting long. Nah, Darren, mine doesn't. I told Darren, me and Darren have different hair. So his hair gets long and flowy and nice. Mine gets it gets curly and rough. So it's like a I don't know, the thing you use to clean like your sink. So I gotta keep it oiled up and so it doesn't get all nasty. But we'll see. We'll see how long my wife allows me to keep it. We'll see how long my wife allows me to keep the beard. That's the true tell right there. Yeah. I've got a trading plan, right? It's a one sentence trading plan for my marriage. Happy wife, happy life. There you go. That being said, we're out for the day. No Trading Edge this weekend, but lots of YouTube videos and podcast episodes and coffee break episodes for you guys to watch. So you should be able to kind of get your fix with the amount of stuff we have here on social media. Darren did discover the cipher. Yes, he is the creator. You guys watching on YouTube or TradingView, do me a favor, just hit that like button on your way out. Show your support. And if you have any questions, maybe you're watching this on review or something like that, just type them in the comment section below. I'll probably be on the laptop at some point this weekend. Got a long long travel ahead of me. Checking stuff and thinking of podcast ideas. So until next time, plan your trade your plan. You guys have a great day. You guys be safe out there. And I'll see you guys next week. See you.